What did you hear this morning that you liked?
I do. I heard what I've always heard from Jay Powell, which is we are data driven and we are going to adjust the interest rates according to the data. And that's pretty much what he reiterated during his whole speech. Now, I think he also reiterated the data that the rest of us are seeing, and that's retail consumers and investors alike, that the inflation rate has dropped, but it's not to the 2% that the Fed wants to have, and that they're going to continue to evaluate both the labor economy and the regular economy and take action. Like, this is what Powell wants, is consistent messaging and a predictable outcome. And I think that that is why I gave him an A, because he is giving us the guidelines that they use to make decisions.
All right, and I ask you about that, even though I really should be asking you about your sweet spot here, semis. That's all that matters. This the whole game. And I mean, do you look at Nvidia and think it's practically a value stock because the PE now? Well, the PE in February must have been like 4 now, based on what we know now.
Yes. Well, maybe. I don't think anything with 3 digits is a value stock in the PE. I'm sorry. I don't generally hold fast to. I'm more of a relative kind of data person rather than an absolute number. But Nvidia is richly valued any way you look at it. But here's the good part. They are in demand. They are ahead of the curve from anybody else with respect to AI and other glamorous areas of the semiconductor market. But we need them. We need productivity. Semis give us productivity. And the other thing is, AI is not just a passing fancy. It is going to deliver productivity and maybe entertainment. But what it really needs is lots and lots of data. So I know that for a fact. I used to be a software engineer in AI, and data is the key to successful math modeling. So I don't know that we can ever have enough storage. So that's why, like Micron and other developers or makers of NAND technology. And I just don't think semis are ever going to go out of fashion ever again.
A lot more favorability for Micron lately. NetApp, another one you like. 30 times is the multiple for NVIDIA. 30, okay? Can we show Coke, Tori? Put like a Coke or a Pepsi or a Clorox or somebody like that on the screen. I mean, Kim, you can get NVIDIA at 30 times after everything that's... Coke's at 23. Which would you rather own?
Right, but here's the thing. They are not alone in making new chips. And it's going to be really hard with AI driving this. Everybody else in the semi space is going to want to catch up to them. And I don't know that they are that far ahead that they can evade having competition. That's pretty much that.
All right, fair enough. And as I've said, you know it better than anybody. Where else? So you want to buy companies right now that you think might offer some value, but more importantly, are going to outperform in the long run. Who else fits that description?
Sure. Well, back in semi-land, we really like Synopsys because they help people design chips. But also, we're looking in other sectors. I know, there are other sectors other than technology. But we actually like consumer discretionary because it's really unloved at this point. And there are great retailers out there. And we think financials are worth a look because we are at the end or near the very end of the rate hike cycle. And we're not in the position where we were last year at this time, where we didn't know where that number was going to be, that 10-year number. So we're very close to the end, if not at the end. And I think financials deserve a good hard look. But again, you have to really do tons of homework there not to get caught out by somebody that might have a bad balance sheet or bad assets on their balance sheet.
Right, and most people feel like that's just over their head trying to figure that out. Although I notice a firm, it's techie financial, but having quite a strong session today. Would you go, big banks, regionals, like it truly just depends? Any criteria in particular that you would be screening for?
Well, actually, I really like both companies in the regional area, but again, companies that don't have any or very much exposure to commercial real estate, specifically offices.